Hello, good afternoon, and welcome to Business on the News. Now, government will start engaging investors over a 3-year bond sale today. Bidding for this auction opens Wednesday, May 31. But what will be the cost of this bond and its impact on the rising public debt, which has reached 127 billion cedis as of March? George Rafi has more.
Says after tomorrow to submit the amount it wants to lend to government and at what cost or interest expected from the state. Government will, together with the 3 institutions that have been appointed to manage this process, that is Barclays, Stanbic and SAS, will tomorrow afternoon agree on the interest that they should pay to these investors. Joy Business understands government is likely to settle on 17 to 18.70% as the expected interest to pay to these investors. Because of the process being used, it is difficult to know the exact amount government is hoping to raise during this offer. It is also not clear for now what government is going to use proceeds of this offer for. But analysts fear it could go a long way to increase the public debt, which has reached 127 billion Ghana cedis as at March this year. However, Deputy Minister of Finance Kuku Kwarteng is insisting measures being instituted will go a long way to reduce the public debt. According to the bond calendar, about 40 billion Ghana cedis would be raised through bonds and treasury bills for the first half of this year.
Meanwhile, government has failed to meet the revenue target for first quarter of this year. Fiscal financial data released by the Finance Ministry showed government was about 2 million cedis down from what it had projected. Once again, this is the following Business Desk report.
According to figures covering government operations for the first quarter of this year, the marginal drop in revenue can be attributed to the inability of the various tax types to meet its targets, but with the exception of VAT and tax on oil companies. This has already resulted in concerns being raised about government meeting its end-of-year target of 43 billion cedis and whether it was prudent for it to go ahead and remove some taxes this year. Persons close to the tax authorities are optimistic of meeting the targets, insisting revenue doesn't normally perform well in the first quarter. However, on the expenditure side, there was something to smile about as it ended the first quarter spending 11.4 billion against the 12.8 billion cedis target. The numbers show the government's money to keep its expenditure on total compensation and wage within target and not even spending all that was projected, a development that some analysts have said could mean that the state might already be winning the war against rising wage bill and expenditure.
And that's all in business for now.